Good afternoon, Tony. Thank you very much for giving the Mint some time to talk about the organisation you're developing, Southwest Mutual. I'd like to start just by asking, in a nutshell, if you like, what makes a mutual bank different from the banks that we're sort of used to and deal with on a day-to-day basis?
Yeah, well, pleasure to be with you, Henry. Thanks. So, actually, I think that we are distinct because we combine three different features as a bank, or at least we're seeking to. And we think we'll be the only bank that has all three of these features. And the three are that we're purpose-led, so we're an ethical bank that's, makes a profit in order to serve its purpose, which in shorthand is to finance the socially just transition to a low-carbon economy. Secondly, though, we are deeply rooted in our place. So it's a regional bank, and that's a very important part of the model, just serving the southwest of England, because being locally rooted, we think, will make us more responsive and better able to make good credit decisions in the region by knowing the markets and the customers very closely. And then the third feature is that we are a mutual, so specifically a cooperative society. And so what's important about that is that we're controlled one member, one vote. The shares that we issue will be non-voting, so it's controlled by its customers, by its members, in a democratic way. And we think that's very important in banking to restore trust, because in essence, a mutual bank is about a sort of relationship of trust between the bank and its members and the members in each other. And we think that the combination of those three things is hopefully going to be attractive to enough businesses and households to get us into a successful, profitable future.
So that brilliant. So just to go further into that, so just members, you said both businesses and households. So is that sort of, are you going both and? So you're going to be a sort of retail, like, I get money out the wall or whatever, you do the same as that, but also businesses, like you're trying for the whole broad field, are you?
We are attempting something that is quite difficult, that has to be said, because we want to launch as a full retail high street bank. So in other words, offering current accounts as well as savings and loans to both personal customers and small business customers. Now, there's a very good reason for wanting to combine all those activities, though, because particularly for smaller businesses, the financial affairs of the owners and managers of those business are very important to, they're sort of inseparable in many ways to the finances of the business itself. And our focus is very much at the smaller end of the SME market, which we think is not well served, certainly in the southwest of England. But then secondly, it's quite important to be able to offer a range of different lending from mortgages through to small business loans through to personal loans, because that gives us the diversification on our balance sheet. It gives us a spread of different loans and assets that we have to make us more financially robust.
Then, of course, we're used to, with our banks, having whizzy apps and everything online and all this sort of thing. So I'm presuming that isn't cheap in terms of the economies of scale and so on. So how do you, because presumably people will want to have the same sort of customer experience, if you like, as they get with a sort of standard bank, if you like.
Yeah, absolutely. So one of the things that makes it possible to launch a bank like this now, in a way that it wasn't possible 5 or more years ago, is that the progress in banking technology and the falling cost and flexibility of new banking tech means that we can actually get at relatively low costs quite feature-rich functionality. So we will certainly have an excellent mobile app, online banking experience, as well as offering a physical branch presence, which we may come back to. But it's actually not the case now that you need a massive risky capital expenditure to build your own banking systems. You can essentially buy them off the shelf, plug and play, pay as you go. It's not nearly as simple as I'm making it sound there, but essentially it is it is a lot cheaper and a lot more flexible to develop new features than it used to be. And we're not aiming to be at the cutting edge of fintech, or the bleeding edge, as sometimes people call it, because that's not really our customer base. But the reality is that new features that are introduced into the market are available sort of almost wholesale from technology companies 6 months later. We can be the second adopter and still offer excellent experience to our customers. And we have the huge advantage over incumbent high street banks, the traditional big banks, who have, of course, the legacy of IT systems which date back to the 70s, even the 60s. And they are still operating these systems. So we come in with a clean sheet of paper and are able to make the best use of the best new technology at low cost.
So and I suppose that's why we have the likes of Monzo and all these people who are coming out, instantaneous, high functionality, etc. But of course, they don't have the branches. So as you said, you will have branches, and so that will be quite a high cost base, won't it?
Yes and no. I mean, another thing I should note about the point about costs, and I think you mentioned the question of scale. We are aiming to be a smaller scale bank. We think that actually gives us commercial advantage of being close to our customers and quick to respond. However, it does have disadvantages of scale, but we think we can replicate that by collaborating with other regional banks. So, we are one of what could be up to 18 regional banks across the whole of the UK. And the intention is that we can share a lot of costs on the back end, for example, joint procurement of IT, technology systems, and lots of other services where we can, to reap efficiencies of scale that way through collaboration. And this model is very common overseas, by the way. I mean, the UK is quite unusual in not having these kind of banks that collaborate in this kind of way, because everywhere from Japan, South Korea, through continental Europe, through into North America and the States and Canada, you do have these kind of social regional banks, but just not here. So it's time that we had them.
But people and space for the branch, that is expensive, isn't it? And I suppose the like of Monzo, the other challenger banks are not going to have, the fintech don't have those costs.
So there's lots of survey evidence, not just our own market research that we've commissioned, but coming out all the time, that shows that there are significant numbers of people that either want to use cash or are reliant on cash for various reasons. And so cash infrastructure remains important. There are quite large numbers of customer groups for whom the option of being able to visit a branch and speak to a human being is very important to them, even if they're not using it as much. And that may be because they have read all the information on the website, but they still have questions and they just want to go and discuss it with somebody, or they're thinking of making a significant financial transaction, and that's a little bit of a scary thing for people to do. And again, they like the reassurance of actually the human touch of speaking to somebody, or they may want to make a complaint and they're frustrated with trying to navigate through a call center, or even not having the option of a call center in some neobank, challenger bank cases. So we think there's a lot of value in branches. Now, the trick is, in terms of keeping the cost down, to again, it's a bit like with the IT systems. We don't have to be looking at traditional bank branches, or massive, expensive stone buildings, that they're very big and have vaults and that sort of thing. I mean, we can have very small retail units with highly automated technology in them. A link by video to be able to speak to customer services staff at our head office. And really, it's all about trying to reinvent the branch for the 21st century, in a way that is low cost and meets needs, rather than, because I would agree that the old-fashioned branch networks are somewhat, not fit for purpose anymore, and they're too expensive to run, and people don't need to go in to do all their transactions. They can do them digitally, but we still do need a branch network. It's just a new kind of branch network.
And then I suppose the tricky bit of actually charging, and I know all the sort of controversy about the fact that the poorest pay because they get the penalties and so on. And some of the newer other banks do fixed charges for everyone the same, don't they? But of course, that then compares to standard banks where you don't tend to pay bank charges? Where are you going to sort of land on that?
So our strategy is to have a simple and transparent model for charging, for fees and charging. So we're planning to have a fixed monthly fee for current accounts. But what you'll get with that is a decent rate of interest, no other hidden charges to trip you up. And, we won't be ripping you off on your foreign exchange charges when you go abroad.
Yeah, yeah.
There are certain areas where, but the problem, I think most people, if they sort of think about it hard enough, understand that if they're getting a supposedly free product in a current account, then the bank must be out to make a profit out of them some other way, which they're probably not aware of. So I mentioned one of the classic areas, which is really unnecessarily high foreign exchange commissions and rates, which is very hard for customers to understand. So that's what I mean by lacking in transparency. We don't think that's honest and transparent. So we'd rather give you a really good rate for you to sort of feel comfortable that you know what's going on here. It's a flat monthly fee, but for that, everything you're going to get is good value, good rate of interest, good foreign exchange when you're going abroad. And then the other crucial one is overdrafts. So the overdraft market is one that's been concerning the FCA, the Financial Conduct Authority, who are responsible for competition as well as conduct, because there were very complex charging structures, and they know that banks are making lots of money out of personal overdrafts.
Right.
So they made them all standardize their charges, and they've all magically sort of settled on pretty well the same APR interest rate, which is nearly 40%. So I mean, this is
40%. Wow.
Yeah. No, I mean, so it's analogous, I suppose, to credit cards. Now, overdrafts arguably should be quite expensive because that there's no security, and it is a higher risk form of lending. But our view is that that's just another area where that's how they make the money back for giving a supposedly free current account. So, we'd rather be good value on those things, and say, look, providing a high quality, we want to have a current account that's really good to use. So it gives you personal financial management tools, budgeting tools, good alerts to help make sure that you can manage your money. We are specifying a sort of jam jar accounting feature, which is where you can have different sub-accounts to divide your money up and manage it really well. So, we want to feel this is a good product that costs us to deliver, and therefore people should be happy to pay for it. Now, not everybody is, that's for sure, but our research again suggests to us that there are enough people for whom they'd prefer that kind of transparency and simplicity, that that's our market. But it's not for everyone.
What about, I mean, classically the fact that what banks rely on is a huge inertia in people's banking habits. And you were saying that there are people who you feel are badly served. You feel that that's enough to deal with the inertia problem, is it? Or how do you deal with this problem of inertia in the system? Or do you think there's less?
Yeah, well, it's a really good question. And of course, as you say, banking, well, I mean, there has been more switching recently because, of course, the switching service has made it much easier to do it and much more reliable. But nevertheless, I don't think that having a bank account and particularly getting things like overdrafts and savings is ever going to be like shopping around for groceries or clothes or anything like that. The fact is, sort of financial products are probably better suited to a long-term relationship rather than the idea that they're a commodity that you buy from one place this week and somewhere else the next week. So I think we're looking to form long-term relationship and make sure we deliver good value and good service over the lifetime. So how do we attract people? Well, I think there's two elements about this. Is the what we're offering distinctive and attractive? And we think that there are two groups, broadly speaking, that will find that it is. And those are people who are values led, who it's really appealing to them, our ethical banking stance. So, for example, we'll have very high environmental and social standards. No fossil fuels on our balance sheet. Thank you very much.
Yeah.
So, there are lots of people for whom that matters, that their savings are being used in a responsible way. There are also plenty of people who feel passionately about their place and their community, and would love to see their savings being put back to work to make the place where they live more prosperous and more socially inclusive. And that's not an option that's open to you right now because we have no regional banks. So there's that value as well. And then there are other people or people who also respond to the mutuality, for whom the fact that it's a mutual bank rather than a shareholder-owned bank or stock market listed bank, that's also very important to them. Now, so there's all sorts of reasons why people might come. And then there's people for whom, frankly, we're just going to give them a better deal. So this is what I might term the sort of poorly served or underserved, customers. Now, actually inspiring, people might think, oh, this sounds great, but inspiring them to take action, to actually bother to move their bank account is a challenge. I agree with you.
Yeah.
But there are sort of certain pain points that people experience where they go, right, I've had enough, and they do sort of take action. So branch closures is one, and this has been now going on for a couple of years, but we've got, I think, still a few years to run of the large banks continuing to close branches, not just in smaller towns, but increasingly larger communities. And that is a very visible and sort of physical point at which people are like, right, I've had enough, I'm going to find an alternative. Also, there are other points where people, have a problem and then their complaint isn't dealt with satisfactorily and so on. And, finally, I guess, it'd be interesting to see how this pans out in practice, but the growing rise of ethical consumerism, if we can call it that, I think 2019 was a bit of a game changer for climate consciousness and for people looking for things that they can take action over in their own lives, which, they can't, none of us can solve the climate crisis, but, we can take individual decisions which are more in line with solving it, if you like, and changing bank is one of them. And I think increasing numbers of people will be sort of searching for those opportunities to make a difference.
Okay, well, let's go, because I noticed that you put first, your purpose was transition to zero carbon. So what as a bank, what as a mutual are you going to do to achieve that? How are you going to tell that story? So, because presumably if you are going to move people in, then you have to tell a vivid story about that that will draw them in.
Yes, so there is an initiative actually, which in terms of the larger industry context here, that's called Banking on a Just Transition. That is a project being run by UK Finance, the trade body for all banks and financial companies, and the London School of Economics, Grantham Research Institute, which is a leading climate change institute. And it has a number of other banks involved in it, and I'm also on the steering committee. So I think I just wanted to note that it's becoming, pleasingly, I think, it's becoming something of a well understood phrase in the industry about this need to not just have a transition to a net zero carbon economy, but to have one which is both fair and seen to be fair to the winners and losers in that transition. So it's recognised as the job we have in front of us. Now what does that mean for how you run a bank?
Yeah.
So I think what that means for me is that we want to, two things actually. The technical part is to integrate from the get-go, which again as a new bank is easier for us to do, environmental, social and governance risk factors in our risk frameworks. So that's not something that's been tacked on afterwards or is having to sort of radically change the way that we assess risk, which is what the big banks are facing.
Yeah,
it's just going to be the way we do it from the word go. So this isn't a branding exercise or a marketing exercise. It is how we actually understand risk, is that we incorporate understanding negative and positive social and environmental impacts of the companies that we are lending to and the activities we're lending to. So I think but importantly, I think what we're talking about is transition. We've got to recognize that most individuals and companies are not there yet. That's the point, right? We are leading high carbon lifestyles, and there are lots of businesses that are nowhere near the performance they could be on social and environmental factors. So what we would like to be about is helping them on that journey. And if what that requires is credit, to finance that journey, then that's what we want to provide. So it's not so we're not going to be going through a sort of tick box screening exercise with people on day one to see whether or not they are environmentally friendly. What we're really interested in is if they want to take actions to become more environmentally impactful, and that's what we want to help.
So you're going to try and find these people, so to identify strategically the people who are trying to or about to go on that journey, or look like they could go on the journey, or are you waiting for people to come to you?
Well, we're still working on that. I mean, it's probably worth saying that it's a long and complex process to get a banking license, rightly so, I have to say. But we're working on our detailed business plan now, which we would aim to be submitting as in a license application early next year, in all likelihood. So the detail of how this works is what we're doing right now. But it's a question of both identifying sectors in the economy which have a big need to transition. So for a rural area, which is one we're going to serve, food and farming, massive issue in going low carbon. Potentially a big change to the way that businesses work, the way that farmers farm, and that's going to take a lot of work to change their business models, and that will require finance. So it's just understanding the places in the economy where we need to be particularly aware of the needs for low carbon transition, and having the right products and reaching those customers. I mean, another more sort of simple example really is making sure there's enough appropriate finance available for retrofitting for householders. That they can, I mean, there's a huge challenge is to convert the nation's housing stock to net zero carbon standards. So again, it's designing the right products and making sure that we're marketing them to people.
And I suppose, I mean, that needs quite a lot of strategic intelligence, doesn't it? I mean, for instance, actually, interestingly, there's a guy in Aberystwyth who is developing a way that livestock farmers can convert their land into protein nutrient production from ryegrass, clovers and so on. So will be that something you try and look out for and then say, we can help you do this or lend stuff to do it, or would you try and see what the sort of strategic directions were and be proactive, do you think?
So as a small bank, we are looking very much to have a partnership model. So, but then again, fortunately, not fortunately, I mean, by design, if you like, the fact that we're a regional anchor institution and that we're a mutual and we're purpose-led opens up potential partnership opportunities with institutions that otherwise wouldn't want to partner with a bank. So, for example, local authorities, with housing associations, and universities, potential partners that have knowledge about what works and what doesn't, know their consumers really well. So, I mean, for councils and for housing associations, that's more perhaps on the social justice side than the environmental side, but we can work with them to make sure that we are being financially inclusive and serving potentially vulnerable customers really well. On the environmental side, well, that's all about making sure that we are working with the local knowledge that exists. But, for example, one of the things that local statutory emergency services need to do with councils, so police, fire and so on, is produce a community risk register, which identifies the likely risks and what the impacts might be to the county.
Right.
Or to the, sometimes they collaborate across more than one county. And this is quite specific and it's quite tailored, obviously, to the physical location. So in a way, there are already people that are working out what the physical risks from climate change might be and how that might impact on business. And we can then partner with these local stakeholders to figure out what that means for banking.
Well, that is all fascinating. So really, you are creating a whole new way of banking, which is going to be integrated in the community, linked to serving the wider community. Is that your sort of vision?
Well, I think so, absolutely part of the vision is that being a mutual, being a cooperative, with a spirit of openness, collaboration, and transparency, will actually give us an informational advantage. So yeah, I mean, it's often said that banking actually is a data or an information business. I mean, in many ways, that is true, although actually I resist that by saying really banking is a relationship business. It's based on trust. The core competency of banking is trust. But nevertheless, information is extremely important. And by having a bank that's effectively owned by its own customers is a good source, we think, of getting them to, we want to listen to them and hear the information that they want to share with us about their needs and what's happening in their communities, because this is just going to feed back into better business and better products. Likewise, with the idea of partnerships with local anchor, regional anchor institutions, is the ability to share information and be better able to respond to what the communities need. And this point about adaptation is, I think, is quite important, because, of course, we face a great uncertainty with climate change. Either we are going to successfully transform our economy so that it goes low carbon quickly enough, which is a huge transition in economic models, which brings a whole load of uncertainty there. Or if we don't attempt to do that, we're going to face much more disruptive physical changes from climate change, which are going to be more disruptive to the economy than it would have been to have gone low carbon. Either way, the future is nothing like the past when it comes to business, including banking. So we need new models that are able to be very adaptive and very resilient to whatever the next 10, 20, 30 years has in store for us.
Brilliant. Well, that I think that's a very good place to end. And thank you very much, Tony, for your time. That is very inspiring. Thank you.
Absolute pleasure. Thank you.